Good evening and welcome to the Accendo Traders Group. This is our video trade plan for Tuesday, June 10th, 2008. AccendoTrader.com. Effective trade plans delivered daily. Each day we have our routine that we go through to make sure we're on the right side of our trades, check the news, check some of our earnings, and publicized news. Certainly there's going to be times when things come down the pipe that we didn't know about, like the Lehman news today that we'll talk about shortly. But we want to know what's come down so we can properly plan our trades and always have time to spend with our families. So let's start off with that Lehman Brothers news. They had a conference call today before the market opened, and they basically guided the fact that they're going to lose a lot of money. We talked about that last week, that was the fear, and it was basically confirmed today, and that they're going to raise about $6 billion in new capital. So it's kind of a double-edged sword that, okay, for the first time, they're going to lose money, but they're raising capital. So how do you want to look at that? They're losing money, so they had to raise capital, or they were able to raise capital. April pending home sales had an unexpected rise. McDonald's had great same-store expectation. Some inflation information coming out from the Fed. Alcoa had some takeover news. Apple had their conference today about the iPhone and staying with AT&T and the new price point. And that new price point, they raised a little concern about their margin and profit margins and earnings for the future, but they affirmed their 10 million iPhone target. 5 of the 10 sectors ended in positive territory. So what does that mean? Well, you look at it, and all these numbers may seem big, but they're really not. Really, this kind of shows that we had a blah day and nothing on the earnings front. And we had some targets raised, no real upgrades or downgrades, but we had a target raised on BNI and VMW, and some of the banks had their targets lowered, JP Morgan, Wachovia, and Citigroup. Tomorrow, all we have is the trade balance. However, tonight, in about an hour or so, Fed Chairman Bernanke is going to talk about inflation. We got another Fed speaking tomorrow on monetary policy. Nothing on the earnings front, and we still have our split plays. There was another split announced today, 5-4, but we're not going to include that. So let's go ahead and move on to our flag list. Okay, so when we go to look at our flag stocks, the main thing we're going to look at is that the NASDAQ still did push down. Now, that's okay depending on how you look at it. From the standpoint of the NASDAQ was higher than the Dow and the S&P 500. You can see that they're basically still above the 50. And when we go to the Dow, we broke the 50 and we're below. And same thing with the S&P 500. So the NASDAQ did break harder today. Maybe traders didn't like what was going on with the Apple conference, but tech took a hit today. But we haven't broken the 50, and I think that's our obvious spot to look at for where to go bearish on the NASDAQ. But as we've been saying, the NASDAQ is consolidating. So right now it looks like we're ready to head on back up. But what's going to be our catalyst to move us up? Not sure if we have anything in the news to do that. When we look at the Dow and S&P 500, you had to expect, after big push downs like this, you had to expect a consolidation day. You can see this kind of matches up over here also. You had to expect something to happen here with regards to a testing day. Now, what does that set up? Well, it sets up a falling 3. Now, on the S&P 500, we've got a big old doji there. So that's really obviously indecision. But it came up to resistance and came back. Also bounced off support down there of the downtrend line. The Dow went up to the downtrend line and kind of fell back from there. So we've got a falling 3 pattern setting up there. And now we just need to have a catalyst to either keep it going or, push us higher. And again, I just don't see anything right now that's going to push us higher, except for unexpected news, like the Lehman Brothers news for today. Apple, I said it yesterday, and at this point, as much as I like Apple, and I said yesterday, there's really no rationale to watch Apple right now, except for you like the chart, and it's been trending well. I'm going to do it. It cuts me deep, but I'm unflagging Apple. ABX, gold. We were trying to see if this was going to break above the 50. You can see it made a doji right here at the resistance line. So we're going to keep that using the high of the day as our alert. AGU, nice gap up to resistance above this all-time high level there. But you can see we actually closed below that wick. So that's where I would put my alert right now, because what I want to see is, are we going to 100? You can see we're at 95. Are we going to 100? So I probably put my alert around 95, 95.50 to catch a push up there. See if we can catch a quick couple dollars. Very tight stop on that. A&R's still moving along. Very nice. Very concerned about the volume decreasing here. So as we're consolidating, if we don't see volume start to pick up and we don't push higher, we have to be prepared for this to roll over. BNI, nice bounce off the 10, setting up sort of a modified rising 3 pattern here. I know it violated rising 3 by definition, but so I would use 114.50, maybe the high of the day, 114.40 as my alert to catch a push higher. CAT bounce on that support level. But that's a falling 3 pattern. So we still want to try to play this breakout. So keep your alert at $80 to catch the push lower. CLF, just like AGU. And as I look at the time, I want you to go ahead and make sure that you're looking and see what we have flagged and what we don't have flagged so that you don't miss anything. CMI, still working out. CNX, coal stock, looking nice, possibly breaking up higher. Probably should bring this down a little bit to right about here. Looking like it's ready to break higher, as it technically already has. COP broke up higher. Oil stocks rebounded. For the most part, this is another one. Going to unflag FLR. Goldman Sachs moved pretty nice. Okay, and now we're ready to begin the education portion of our video. We're using the book Trading in the Zone by Mark Douglas, and we're going to finish up Chapter 2, The Law of Trading, with talking about external and internal control. And Mark goes on to talk about, how we like to control our environment, and my brother is king of this. He's very good at controlling, these external factors if we're looking at it as an experiment. And one of the reasons I don't think that he took to trading is because it wasn't something he can control. He's a programmer, I've heard it said that accountants are like this. My mom's an accountant, and I've been talking to her about it, and she's starting to buy in. But when you look at things as not being able to realize that 4 plus 4 doesn't always equal 8. In the market, 4 plus 4 doesn't always equal 8. You can have all the indicators and chart patterns and everything you want line up, and it could do the exact opposite than what you plan. But especially like a day today where news from Lehman Brothers or other places come that wasn't expected and pushes the market in a direction opposite of what it might have gone. So my point is that one of the reasons, and Mark goes on to say this, that one of the reasons successful people have failed at trading is that they have this ability to control their environment, but the market is not something that you can control. The market does not care. Get it through our heads. The market doesn't care about you, doesn't care about me, it doesn't care about us, it doesn't care about we. The market is what it is, just tick, tick, tick. And us putting information or value or interpretations of that tick. The market doesn't respond to any control manipulation. The pump and dump days of, the penny stock pump and dump days for the most part are over. So if we can't control the external, we can't control the market, what can we do? We can control how we interact with the market. We can control our behavior. And instead of trying to force the market up mentally with some type of ESP, we can change how we perceive the information. We can change our perspective of the market and be as objective as possible and structure our mental synopsis about the market so that we're able to behave in a manner that's in our best own interest. Again, using our psychology of trading and developing a system, either on paper, let's just stop there, on paper, we're able to create an environment where we're making educated, controlled decisions, not emotional ones. That's what trade plans are all about. As always, to get the full version of the podcast of the trade plan today, go ahead and download the podcast. For feedback, there's the link. And as always, go ahead to our blog. It's in it's in the process of being updated, and I'm making some changes. And what I've just decided to do is to, instead of doing it one by one, I'm doing them in the background, and I'll release them all together. So it's taking a little bit longer than expected. But I still want you to go there. I still want to hear from you guys. I've heard from a couple people, but I want to hear from everybody. I'm an educator. I'm a teacher, and trust me, if you have a question, so do other people. So go ahead and post them. Let's get that dialogue going. Blog.michaelglass.com. Trade at your own risk, and I will see you guys tomorrow.